On September 1, 2025, the global automotive industry was rocked by a single press conference. Wang Chuanfu, CEO of BYD, announced a move that upended decades of tradition and secrecy. This wasn't about a new car or a flashy innovation. It was a declaration that the old rules no longer applied. For years, automakers fiercely guarded their proprietary technologies, seeing them as the keys to their empires. But Wang's announcement proposed a future built on collaboration, not secrecy. The industry was forced to question everything: strategies, investments, even survival. Stock markets trembled, headlines exploded, and the world realized this was more than a business story. It was a turning point for transportation. The decision could affect the price of your next car, the fate of factories, and the speed of the shift to clean mobility. Suddenly, the future of the auto industry was in flux. Every company now faced a stark choice: join the new open ecosystem or fight to preserve the old order. The stakes? Trillions in market value and millions of jobs worldwide. As the dust settled, the industry stood at a crossroads. Would they embrace this radical openness, or resist and risk obsolescence? The story of that day is the story of an industry forced to reinvent itself overnight. The world was watching, and waiting for the next move. To grasp the impact of BYD's announcement, you need to know the company behind it. Founded in 1995 as a battery maker, BYD has become a global EV powerhouse, controlling nearly every part of its supply chain. Led by chemist Wang Chuanfu, BYD's relentless innovation, especially its blade battery, has made electric cars safer, cheaper, and more accessible. By 2024, BYD had surpassed many legacy automakers in EV sales, expanding rapidly across Europe, Latin America, and Asia. Its electric buses and cars are now challenging established brands worldwide. BYD's vertical integration and cost advantages have put immense pressure on rivals. Before the announcement, BYD was already forcing competitors to accelerate their electrification plans. Companies like Volkswagen and GM were scrambling to catch up, investing billions in their own platforms. But no one expected BYD to change the rules entirely. Their next move would prove their ambition wasn't just to lead but to reshape the industry itself. BYD was no longer just a disruptor, it was setting the pace for the future. The world's automakers were about to face a challenge unlike any before. The game had changed and BYD was holding the cards. On September 1st, Wang Chuanfu stunned the world, not with a new car, but with a radical idea. BYD would open its core EV platform, including the Blade battery and E-Platform 3.0, to other automakers for a nominal fee. In effect, BYD was open-sourcing the technology that gave it an edge. Wang argued the climate crisis was too urgent for corporate secrecy. Accelerating the EV transition was the priority. The move aimed to help struggling manufacturers speed up affordable EV production. This wasn't about short-term profits, but about creating a global standard for electric vehicles. The industry's walled gardens, unique systems, high barriers, were suddenly under threat. BYD's offer was an invitation to build on its foundation, much like Android did for smartphones. Analysts saw the genius. If BYD's tech became the standard, it would become the backbone of the global EV supply chain. Other companies might build the cars, but they'd rely on BYD's ecosystem. This could mean new revenue streams for BYD: licensing, servicing, components. If successful, BYD would transform from car maker to foundational tech provider for a generation of EVs. The shock wasn't just the announcement, but the sheer ambition behind it. The industry now faced a choice: adapt or risk irrelevance. The future of mobility was suddenly up for grabs. Financial markets reacted instantly to BYD's announcement. Major automakers' stocks plummeted. Volkswagen, GM, Ford, even Tesla, all saw billions wiped out in hours. BYD's stock, meanwhile, soared to record highs. Investors saw BYD's move as a threat to the old order and a bet on a new industry standard. Battery suppliers competing with BYD like LG Chem and Cattle also took a hit. Dealerships reported a sudden pause in EV sales as consumers waited to see which technology would win. The uncertainty froze a booming market, hurting traditional automakers' revenues. Market volatility spiked, and credit agencies warned of existential threats to companies clinging to proprietary tech. The verdict was clear: BYD had changed the game, and everyone else was scrambling to keep up. The shockwaves rippled from boardrooms to showrooms. The industry's foundation had shifted overnight. BYD's rivals reacted with urgency and anxiety. Tesla, usually outspoken, went silent. Elon Musk made no comment, signaling deep strategic recalibration. Tesla's proprietary tech and supercharger network were suddenly at risk of being overshadowed by a new standard. The company faced a tough choice: protect its edge or adapt to the new reality. Volkswagen, meanwhile, was thrown into turmoil. Its €50 billion investment in the SSP EV platform was now in jeopardy. Emergency meetings revealed divisions: double down on their own tech, or partner with BYD to cut costs. Labor unions worried about job losses if Volkswagen adopted external technology. The German model of engineering excellence was being challenged by Chinese-led openness. For legacy automakers, the dilemma was existential: stick with expensive, slow proprietary platforms, or risk brand identity by joining BYD's ecosystem. The scramble wasn't just about business, it was about survival. The industry's giants were forced to question their very identity. The next moves would define their future. The stakes had never been higher. In the US, legacy automakers like GM and Ford faced a direct threat. GM's Ultium battery platform, the heart of its electric future, was suddenly at risk of being outflanked by BYD's open-source alternative. CEO Mary Barra doubled down on Ultium, emphasizing GM's manufacturing strength and American roots. Publicly, GM kept the door open to partnerships but focused on scaling its own tech. Ford, riding high on the Mustang Mach-E and F-150 Lightning, faced similar questions. Should they keep developing their own platforms, or license BYD's to cut costs and speed up? The debate inside Ford was fierce, mirroring the industry's uncertainty. Meanwhile, US lawmakers worried about dependence on Chinese technology, complicating decisions for automakers. The response was a balancing act, projecting confidence while navigating a complex geopolitical landscape. For American automakers, the challenge was both technological and political. BYD's announcement sent shockwaves through global supply chains. Suppliers tied to proprietary platforms faced uncertainty, while those aligned with BYD saw new opportunities. The industry began a massive reshuffling, winners and losers emerging overnight. For consumers, the promise was clear: cheaper EVs, thanks to BYD's low-cost battery tech and economies of scale. If adopted widely, electric cars could become affordable for millions, accelerating the end of gas-powered vehicles. But there was a trade-off: standardization could mean less variety and brand identity. Cars might become more like commodities, cheaper but less distinctive. The move toward a single platform could reshape not just prices, but the entire driving experience. The industry's diversity was suddenly at risk. BYD's move redrew the global auto industry's map. The old world was divided by regions and proprietary tech. The new world is split by ecosystems. Some companies will join BYD's open platform, trading independence for speed and lower costs. Others, like Tesla, Volkswagen, and GM, may stick with their own systems, betting on brand loyalty and premium experiences. The industry now faces an Apple versus Android-style battle: open standard versus walled garden. For automakers, the choice is critical: invest in competing tech or join the BYD ecosystem and focus on design and marketing. The decision will reshape workforces with fewer R&D jobs and more software roles. Geopolitically, China's influence grows as the open platform's center, while Western governments may protect their champions with tariffs and subsidies. The result could be a fragmented industry, with different standards dominating different regions. Trade barriers may rise, complicating global operations. The strategic realignment is underway. The future will be defined by the choices made now. Weeks after BYD's announcement, the industry remains in suspense. The central question: will automakers embrace collaboration or dig in for a technological war? Adopting BYD's platform could lower costs and speed up the EV transition, crucial for fighting climate change. But it means ceding control to a powerful rival, risking brand identity and independence. Rejecting BYD's offer could spark fierce competition, driving innovation but slowing the shift to electric vehicles. Competing standards could confuse consumers and raise costs. The industry stands at a critical inflection point. The choices made now will shape mobility, climate action, and global power for decades. Will the future be built on open collaboration or become a battlefield of competing empires? The road ahead is uncertain, but the world is watching.